Whenever you want to order something from the internet, you'll probably end up getting it from Amazon.com. This e-commerce giant holds a staggering 45% of the e-commerce market share and sells upwards of 1.6 million packages every day. Amazon has also produced massive long-term returns to investors. Just from the last decade to 2021, this e-commerce behemoth has seen its share price grow by over 1,400%, with the e-commerce industry in a steady track to grow to a 1.7 trillion industry by 2027 at a compounded annual growth rate of 13.51%. Amazon has cemented their position as the market leader in this promising field. However, Amazon has had a terrible time recently. This year, the stock has dropped by more than 40%, and Amazon has been struck by rising inflation, supply chain interruptions, and excess fulfillment capacity, all of which have dragged on key indicators such as operating income and free cash flow. The stock performance of Amazon reflects this upheaval. But is this downturn an opportunity? And does this imply that investors should purchase Amazon during this dip? The problems Amazon is facing. Rising inflation has seriously taken a toll on Amazon's ability to generate profits. For starters, it raises the company's operating costs from packaging to shipping as raw materials and gas have become increasingly expensive. These factors considerably hamper Amazon's profitability as their services rely heavily on the packaging and distribution of physical goods. In addition, growing inflation puts a strain on consumers' finances. People are less willing to spend money during difficult economic times when survival needs such as food, rent, and hygiene products also spike in price. Another major income source of Amazon stems from Amazon Web Services, a subsidiary of Amazon which offers cloud computing and IT management services. AWS generated $62 billion in revenue for the firm in 2021. However, this field is highly saturated with Amazon facing major competitors such as Microsoft Azure, Google Cloud Platforms, and Oracle. During the business's third quarter results call last month, Amazon Web Services revealed that clients had begun reducing their expenditures in light of the stringent competition, in which AWS has reported the revenue growth has slowed to 27%. This is a decrease of more than 30% in prior quarters. Lastly, Amazon's operations have been hampered by global supply chain issues. Apparently, the corporation has struggled to balance supply and demand throughout its vast fulfillment network, which is a service that Amazon provides that involves the picking, packaging, and shipment of goods from independent businesses and sellers. Amazon greatly expanded its fulfillment network due to the massive demand of online retail during the pandemic's early stages, but the ease of the lockdowns has seriously disrupted normal operations. However, despite the grim state that Amazon is currently in, the firm shows promising prospects in the near future. Positives of Amazon. The first thing to remember is that the current trend of growing prices and economic problems is only transitory. Inflation will not last forever and the economy will always recover. Amazon might be in a terrible position right now, but the corporation has the means to withstand the storm. Despite the economic downturn, Amazon's revenue has actually risen. Net revenues have increased by 15% in the third quarter, and even though AWS sales growth has slowed, the company is still increasing their revenue and operating profits by double digits. In addition, it seems that Amazon has built an increasingly robust cost structure. The firm has made headway in reducing costs throughout its fulfillment network. It claims that it's working on a stronger cost structure, which should be a positive in the long run. It's also worth noting that Amazon is a market leader in the two most promising industries, e-commerce and cloud computing services, in which both are expected to have double-digit growth rates over the next decade. Additionally, the company's attempts to entice more Prime subscription service users are bearing fruit. Prime's recent NFL Thursday Night Football premiere resulted in the 3 highest ever hours of US Prime signups. Despite the heavy competition, Amazon Web Services is still one of the highest priority assets of Amazon, in which the firm is focusing on expanding its infrastructure internationally to reach foreign markets. So why exactly is Amazon Web Services important to investors? AWS significantly lies in its applicability. AWS assists in a plethora of tech companies such as Netflix to create video content, Verizon to build up its 5G infrastructure, and even Vertex Pharmaceuticals to discover novel treatments. Cloud computing is crucial to supporting the massive internet infrastructure boasted by the modern society. AWS accounted for just 16% of Amazon's total revenue in the first 3 quarters of 2022. However, it is Amazon's sole profitable division. So far this year, Amazon boasts a 30% operating profit margin, producing a stunning $17.6 billion in operating profit. In comparison, Amazon's North American and foreign e-commerce divisions lost $2.6 billion and $5.5 billion respectively during the same period. Now compare this to Amazon's e-commerce activities, which require several variable costs, such as packaging and shipment costs. To put this into perspective, Amazon's e-commerce sector generated $469 billion in 2021, but came out with an operating profit of a measly $33 billion, or just above 7%. AWS is by far the company's most profitable division. Although AWS revenue seems to be slowing, management suspects that the Q3 results were an anomaly and that the firm should see greater growth in the near future. Amazon stock, which has a market valuation of $910 billion currently, trades at 43 times AWS's operating income. While not particularly inexpensive in absolute terms, this is hardly the worst value compared to pre-pandemic Amazon levels. Considering Amazon's stock price, the stock is now selling at less than 2 times revenues. This is the lowest level in roughly 6 years. At the same time, the company's Prime membership service and e-commerce sales continue to expand, with AWS remaining a critical source of the cash flow. It has historically fueled Amazon's overall operating income. So, should you make an investment in Amazon stock right now? Amazon has what it takes to weather today's storms and prosper in the long run. Thus, at the current price, Amazon stock seems to be a steal. However, please proceed with caution when considering an Amazon investment, since the company cannot afford to see another AWS growth slowdown. Although the short-term implications seem risky, Amazon's diversified portfolio of products and services are stationed in high-growth sectors and will definitely propel future growth. Overall, we give Amazon stock a buy rating. After losing 200,000 subscribers, Netflix recently launched its $6.99 ad-supported plan and subsequently saw a large spike in subscriber count. Considering the implications of tough competitors within the streaming business, is Netflix's stock a good buy right now? Check out our analysis on Netflix's stock in this video. Thank you for watching, and please subscribe to our channel.